Welcome back to another episode of the Shared Practices podcast. And today I'm doing another solo Ask George episode where I'm going to talk about CPAs in practice ownership. For those who might be longtime listeners, you might kind of know maybe some of the things that I've said about dental accountants over the years. And, I've had a very interesting experience with dental accountants. And so I kind of want to start the episode just talking about my thoughts about accounting and accountants in general throughout the years. I just think that this is one of those things that my thoughts have evolved naturally as I've become a CFO. And so, early on in my career, one thing I noticed very early, which is sort of why I had it out for CPAs, is that, so for example, if you read Dental Moneyball, I have like this whole section about accountants necessarily being, they don't, in my opinion, this is my strong belief, is that I just don't believe they deserve that place that dentists have given them as their most trusted advisors. So I think that in general, my issue with dental CPAs that I've kind of had for many years now is this idea that dentists make them their most trusted advisor. So like I've talked to dentists who ask their CPA how much they can pay themselves, or they ask their CPA, about what to do to run their practice. And they think that because the CPA is the financial person, that they're like the most trusted advisor. And so there was polling that's been done on dentists, and the polling shows and reveals that of lawyers, CPAs, practice management professionals, all of these different people, they view their accountant as their most trusted advisor. And that for me is like, that's too far. So that's kind of been like one of the core issues I've had with accountants in general is it's not necessarily them as much as it is how much dentists put in their area of oversight. And I often think that accountants can stretch beyond or outside of what is their area. And so like that's kind of from a very early part of my career been just something that I found annoying, because from my perspective, I like to think of growth and driving revenue and practice collections, production collections growth. Like I like to put that at one of the higher degrees of importance. Accountants often give advice that actually limits growth because what the accountant is looking at optimizing for profitability. And so when you're talking to your CPA, they're essentially looking at, okay, let's keep the business the exact same in terms of top line revenue, and how can we clean up our expenses so that we're more profitable? It's a valuable piece of information, but if taken out of the wrong context, it can limit growth. And so I want to just kind of like have an episode where I talk about my thoughts on CPAs, where I think they're good, and also where I think you need to be careful. I just want to start by saying not all CPAs, dental CPAs, are created equally. This is very similar to dentists, right? We say that a patient goes into 10 different dental offices, they're going to get 12 different treatment plans. And so I think that, again, we're talking about 10 different dental CPAs. There's shades of gray. There's actually one in particular dental CPA who read Dental Moneyball and, read that paragraph or two where I'm pretty critical of dental CPAs, and then sent me an email saying that they agreed with a lot of the things that I had said, and also felt like it was, one of those things that they agreed with a lot of the sentiment of my frustrations. So I say that to say that like there are some really great ones out there, and I don't want this to be like an indictment on all of them, but I do want to talk about them in generality and talk about where you maybe need to be careful. And so, the first thing I just want to talk about is, setting the stage and the frame. When I became a CFO, I learned a lot more about how they think and what they look at. And so I feel like I have a pretty nuanced perspective on the situation where hopefully I can kind of help you understand. So I think one of the things that is very clear in any type of accounting practice or any type of looking at dental financials is you are looking at an in-depth historical view. So, this is, it's different, right? So like, for example, if I wanted to look at the future, I could look at things like how many patients are pre-appointed on my hygiene schedule, or I could look at, how much production is on my schedule this month, right? So like future statistics, or future KPIs, I find them to be more helpful in nature because of the fact that you can still influence that outcome. However, historically, when you look at something in retrospect or historically, you have a lot more information. So like, for example, if, when you take the time, like your accountant probably takes 30 days. So by the way, your accountant should take 30 days. If your accountant takes more than 30 days to get back to you, they're taking too long. But, you should on the 30th, no later than the 30th of the following month, you should have your financials from the previous month. And you should be looking at those financials on a regular basis. And you should have a view that you're very accustomed to. So you should have a view of the financials that you look at every month that you're familiar with, you know how to navigate it, you know where the key numbers are, so that you can get like an efficient view of the business. One of the key things that CPAs do in the positive is they take all of the expense activity that occurs and they organize it in a way that's very clear and that you can have insight and you can see, okay, what is my staff cost as it relates to my office, and like, I kind of want to maybe just walk through some of the major cost categories, but like it's going to be extremely helpful in your supplies and lab, right? Those are your variable costs or your costs of producing dentistry. CPAs provide all of this extremely helpful information where they know how to go through your banking records and your practice management software and turn into these very detailed reports. And so the detailed reports, they're great, right? And you need a CPA to do that. So, that's going to be one of those things that it's kind of a necessary thing. But you need to know where to listen to them and where not to. And I think that's where dentists start to go wrong. And so like what they do really well is understanding the accuracy of historical numbers. So like, for example, if you're looking at a number and it doesn't look very accurate, you ask your CPA, they'll be able to help you, right? Like they can dig into the weeds. Tax efficiency, compliance, like those are all questions for your CPA. For example, what's my good tax strategy? Should I add my kid as of this to the practice? Or like, should I do this? Should I do a 401k? Like and if it has anything to do with tax, by far the best person to ask is your dental CPA. Compliance, even like, are we compliant with the state regulations for, sales tax, for toothbrush sales, or, all the little things, like, are my payroll accounts compliant from a tax perspective? All of that stuff, CPA is also going to be a great person. Tracking expenses, also a great person. And also risk reduction on embezzlement. CPAs, also a great person. So like these are all areas where your CPA is going to be able to provide value. If you noticed, all of these things are conservative in nature, right? So it's like tracking your expenses is a very conservative defensive act. Preventing embezzlement risk is a very defensive act. We're maintaining tax compliance and tax savings and making the proper tax payments so you're not surprised with a tax bill. Also very defensive and conservative in nature. And so if you had to like kind of bucket all of these categories in one, I would say, well, CPAs are for the conservative things, right? The defensive topics. But there's a miss that comes with that, where it's like, if you're so defensive in nature, you're missing out on the opportunity on offense. And I think that practice growth is an offensive thing, right? You're trying to increase the value of your business. You're trying to increase your income. You're trying to do all of these things. Then your CPA, like they're not really built for that. They're more built for keep your revenue the same. How do you make more? How are you more efficient tax expense wise? How are you more efficient from a expense management perspective? How are you more efficient in the way that you have multiple people touching the revenue cycle so that you're not getting embezzled from? Those are some of the things that you really want to rely on your CPA for. And I just want to take a minute and talk about embezzlement. Because, where this comes up is the deposit ratio. So every CPA in a good CPA report, you should have what's called a deposit ratio. And this is the ratio between what your practice management software says is collections and what is deposited in your bank account. And there's like a certain percentage, like for example, there should be like a 98% deposit ratio. So like of your collections, 98% of them should be tracked into the bank. And then there's like these discrepancies, like maybe you have your merchant fees come out of the credit card, or maybe you have, you get a big check at the end of the month and it doesn't clear until the next month, but the practice management said it was collections, but the bank didn't get it yet, right? So like the accountant's job is to make sure that everything that your practice management system says is collections is making its way into your bank account. And that is one of the major sources of embezzlement, is when a patient has paid for something and for whatever reason, the team member they have to count it as collections because it has to go to the patient's account, right? The patient paid the money. They expect their balance to go down. So it goes to the account, but then does it go in the bank account? That's a source of embezzlement. And then the other source of embezzlement is in the adjustments, right? Where they're going to like say, okay, like we're adjusting this off and we're writing it off, but maybe the patient paid and now we have like money that's not tracked, right? So your CPA, if you have any questions about embezzlement, or if you have any questions about is embezzlement happening, I have this, like they should be screening for that in the deposit ratio on your monthly reporting. And then if your deposit ratio is ever off, they should be doing a deep dive into that to get you more details and answers. And so like those are some of the things that CPAs do exceptionally well. And I think one of the things that I learned becoming a CFO is that accountants have all of these rules. There's all of these super in-depth rules. Like it is the most rules-based job, of any job I can think of. It's just there are rules upon rules about how to properly account for things, and it's all in the spirit of being perfectly accurate. So like what CPAs are really good at is being perfectly accurate in the things that they care about accounting for. Now, what that does is it gives them this view of the business of cut, right? It's like cut expenses, because their way of providing value to you is improving your profitability. And the way that they know how to do that is telling you to cut expenses. Now, this is where you as the owner, you need to know, okay, like, maybe the CPA is your most trusted advisor if you don't want to grow your practice and you just want to be as profitable as possible. Maybe they are your most trusted advisor. But, I'm a practice management person. And like, from my perspective, I think that your most trusted advisor should be helping you globally, right? So you should be able to tell them, this is my vision for what I want my life to be. These are my goals. My practice is the vehicle to accomplish those financial goals, both in how much is my practice worth, how much equity do I have in my practice, how much income do I make month over month. Like all of these things are really important. And I would argue more important than some of the things that your CPA tells you to do. And so I think that like, especially early ownership or, in that, like a dentist typically goes through these phases in their career where they get into ownership and then early they're driving growth or they're pushing, and there's like this push period at the beginning of ownership. And then it starts to turn, maybe the practice gets to the size that you want. And then it kind of goes on more of like a steady state. And it's really during that growth period that the accountant can be pretty disruptive. So let me tell you a story about my situation, right? So if you've read Dental Moneyball, what happened is I bought a practice. It was doing $90,000 per month. I grew it to $140,000, $150,000 per month pretty quickly with some co-diagnosis called the honeymoon phase, because I was diagnosing all this dentistry on existing patients that wasn't necessarily new patients. So I added staff expenditures because I wanted to grow even more. And then my practice sort of tanked. And at that point, I was stuck because I had taken on these staff costs. So like my staff costs were 35%, which is like really high. And so, I'm on a call with my CPA, and my CPA is like, your staff costs are really high. And, I think that it's really important when, that's the CPA's job. The CPA's job is to tell me my staff costs are high. It's like, well, I actually knew that, but thank you. And my response was, yes, if you look historically, our collections used to be in the 140 to 150 range. Right now, we're doing 100 to 110. So it's pretty high. But with this team size, I believe we can get back to the 140 to 150 range. And then my accountant was like, oh, well, if you get to that 140 to 150 range, then your team costs would normalize again and it wouldn't be a concern. And, the accountant has no idea how I could possibly go from 100 to 140, 150, right? That's not their area. But when I brought that up in the conversation, my accountant was reasonable. And he said, yeah, like if you can grow to that level, then yeah, like the expenses are going to look good again with the team costs. And it's like, great, but how do I get to that point? That's not really the CPA's, that's not the CPA's lane. And so you have this professional who is the most trusted advisor in dentistry who does not know how to grow a dental office. Like that inherently is going to bias towards cutting and making modifications, assuming no growth. Right? But like one of the big concepts that we talk about a lot is this idea that growth is predictable and it's something that can be done over and over again. And so that's where you kind of have to change the paradigm and you have to say, okay, well, ask yourself the question, do I want to grow? If I want to grow, then there's some advice that my CPA is telling me that probably doesn't apply. And if I don't want to grow and I want to stay and I just want to kind of like cut, then I think that's a situation in which the CPA can be a very trusted advisor. And one area where you're going to have that misalignment is going to be investments in growth. So, for example, marketing spend, or for example, coaching spend or other types of spend that are going to be more growth focused, right? And this is you saying, I'm investing in future growth. So I'm taking on a cost, and the purpose of that cost is to grow my top line. And when I do that, then all of a sudden, I now have this ability to predictably grow my practice, right? Like even you could look at an expense like, we talk a lot about, adding hygiene days, right? So you're going to add a hygienist, you're going to bring on a 2-day-a-week hygienist, you're adding staff costs, right? But those staff costs are considered an investment in growth. And so you are bringing on an additional team member with the investment of growth in mind. Because what accountants do is they have, especially if you're using a dental CPA, they have a bunch of dentist clients. And so they have like averages where it's like the average dentist client of mine, of the 100 clients that I have that are dentists, their average staff costs are 27%. And the top 10%, their staff costs are 20%. And the bottom 10%, their staff costs are 33%, right? So they have like all of this useful information that they compare every practice to. So of their 100 dentists, they're going to compare them all to each other. And they're going to tell you as one of the 100, where do you rank relative to their clients, right? But in this situation, your goals may be practice growth. So you want to grow your practice. That may require an investment. That investment may take your staff costs from yellow to red or from green to yellow, right? You could be green, as in great staff costs. And then to take on this investment, you need to go back down to yellow or to red to add to your team cost. Your accountant's going to say, don't do that. But reality is, you have to do that if you want to grow because you need the people there before you can get the patients. So there's things like that come up along growth where you must make that investment before the practice has revenue to justify that investment at times. And so you need to have that ability to know, well, what's the right time to add that person, right? So you have to ask the question like, well, what's the right time? So the information you need to know when it's the right time is you need to understand your practice analytics. You need to understand your overdue recare percentages. You need to understand your new patient flow. You need to understand how booked out you are currently. You need to understand your operatory configuration, your team size, your front desk setup. Like there's all these things that you need to understand to properly make the decision, when do I add that additional team member as an investment towards growth? And your CPA, frankly, doesn't have any of that information. So that's where I would kind of want to put a line in the sand and say, okay, if I don't want to grow, then my CPA has all of the information that they need to provide me with accurate information on how to play defense and how to, essentially cut my costs, maximize my profitability, and do it in a very tax efficient way and know how to pay myself in a way that's not disruptive to cash flow and not get embezzled from. That's the CPA right there. And then on the other side, you want to grow your practice. Well, the CPA is not really properly equipped for that because they know defense really well, but they're a defensive specialist. But you need offense. And so that's where you need to say, okay, well, where are the opportunities for growth? How do I tap into those opportunities? How do I sequence them in a way that's efficient, like we're going to grow fast, but also we're going to grow smart, where we're not going to take on too many expenses too soon. And so what ends up happening when people listen to their CPA is they use these defensive strategies when they want to play offense, and that leads to no progress. Because just candidly, if you don't have the team to add those patients and grow your practice, then you will not grow because you are limiting your growth by your view of cutting expenses. Too much so that it's essentially cutting out the oxygen that growth needs. It's not the CPA's fault. Their job is not to push growth. Their job is to be the brakes. Right? But if the brakes is your most trusted advisor, then what you're going to do is go slow and not grow that much because you're listening to the brakes, right? So there's brakes and there's gas. And, I think that based on your goals, like you really do need to kind of have different advice. And like obviously I'm biased, but I would say your practice management expert should be your most trusted advisor, right? The biggest way that a dentist has to make money is the income from their practice and the net worth of their practice, right? The value that practice, the practice 01k balance. Those are the two drivers of a dentist's financial health. So I would say that the size of the practice, the revenue amount of the practice, and how well that practice operates and how much it can grow are like probably the most important things. So, that's where I just have this like, you see, it's like I like CPAs. I have multiple that work for us, right? Like I find them to be they have their unique angle, right? And they have their perspective, and their perspective is helpful. It's a helpful data point. But if you want to grow and you want to aspire for more than what you have today, they're simply not the person to talk to. They are the person to talk to when you have the revenue coming through that you want and you want it to be as profitable as possible. And so I think that that's kind of one of the big things on the ownership side. And I want to take a minute and talk about the pre-ownership side, because you're going to see kind of the same element of like, you'll just see the same, just the same blind spot, so to speak. So like what I'm getting at is the CPA is really good at historical financial analysis. What they're not good at is practice projections and practice growth. So anything that is outside of the numbers and is more about the operations is harder for them because that's just not their skill set. And so it's very similar on the buyer's representation process, right? Like most people think that when they go buy a practice, they need to get an attorney and a CPA and a banker, right? So they have the attorney do the contracts, they have the CPA do the financial due diligence, and they have the banker do the loan. And that's like a team. And, we at Shared Practices, like we have financial people in-house that do that financial analysis process that the CPA does. But I want to explain to you the difference between our buyer's representation services and a CPA's buyer's representation services, because you'll kind of understand the same blind spot. So what they say is okay, the practice is not going to grow. You are going to replicate revenue. Let's put in your bank loan and let's repeat all of the expenses again. And let's see how much money are you taking home. And then let's also check the tax returns to make sure that this income is legitimate and that you're truly paying for a practice that is genuinely performing the revenue and income that they say it is. So you're doing a due diligence on a few things. You're doing a due diligence financially with a CPA on, does this practice make me the income that I need or want after paying the debt service? And also, like, are there any red flags or anything fishy going on in the financials, or is everything kind of above board? Your CPA is going to do those two things. If you noticed, it's very similar. It's historical, it's the breaks, it's risk control, right? Like that's the CPA's job. We do that. So we have our financial individual in-house who does that exact same process. But what we also do is we remote into the practice management software. We pull the overdue recare list. We look at the schedule. We look at the patient flow. We look at all of that same information that allows us to guide growth, to also guide if this practice is a good purchase or not based on the patient base, right? So it's like you can see in the pre-owner example, the CPA has the same blind spot as the owner example. Their blind spot is on the KPIs, the practice health, the patients, the hygiene, the retention, the capacity, all of these different things that are not in the financials, in the historical financials or in the tax returns. And so it's the same miss. Again, it just looks different. You have somebody who's extremely detailed and really diligent about the historical financial analysis. But that is not the whole picture. And so that's just the key thing I really want to communicate is that is not the whole picture. It is a big part of the picture. And if you're wondering, like, why am I hammering this home? Well, I'm hammering it home because I'm speaking to dentists. And according to the research I've seen, the CPA is the dentist's most trusted advisor, which means that all the dentists that view the CPA as their most trusted advisor have a most trusted advisor whose inherent bias is against growth. Like, I just think that's worth elaborating on and making sure that everyone is very, very clear on that. And so I think that the proper role of a CPA is taxes, for sure. Like, there's no other person in your professional circle that is a bigger expert on tax than your CPA. even compliance, like how to remain compliant with tax, with local tax, with state tax, all of that. You're going to want them. You're definitely going to want them for embezzlement, like anything related to embezzlement, preventing embezzlement, exploring embezzlement, investigating, like all of that stuff. You're going to want them. Also, you're going to want your CPA for clear cost analysis, right? Like, where do I spend my money? In what buckets does it go? And then if you ever don't think something is accurate, that's what CPAs do exceptionally well, is accuracy, right? They really, really care about that. And so those are some of the things that CPAs do exceptionally well, that you should rely on them for, that everyone needs, and, all of that. Now, the one that I kind of have a hard time with is like a paying yourself question, because I've heard accountants give like some pretty very conservative advice on this, and I tend to, I don't know why, but I tend to like want dentists to be a little bit more aggressive paying themselves. I mean, I've seen misses on both sides. Like, I've seen people that have, like excessive amounts of money in their business checking account that they don't need that much, and they're already paying taxes on it. So it's like, just wire it to your personal account. And then I've also seen on the other side that like people don't let enough money sit in their checking account, right? So you should like have 1 month of expenses. If you're running like a solo practice between a solo office and like a mega group, you should have 1 month's break-even point. Like all the expenditures in 1 month, you should have a minimum of that in the account. But like, how much should I pay myself? Like, I don't love making that question dependent on your accountant's answer. Like, you should pay yourself profit above what you need to operate the business. Like, if you have the profit there, then you should take it out, and you should keep what you need, the 1 month's break-even point, in the business account. And you shouldn't like need to ask. Like, you should just kind of know how to do that. And your CPA, maybe you ask them and they give you that advice, and then you go from there. But like, hey, can I send myself a $20,000 check? Like, you shouldn't be asking the accountant that on a regular basis, in my opinion. I find that to be too much discretion that you're giving the accountant. Like, that's a pretty big deal, is how much you pay yourself. So you should probably do that yourself. I think the more important thing around this is tax planning, because what happens a lot of the times is, like, you're going to make your income throughout the year, and, you get to the end of the year, then you figure out your tax bill, and then it's due, but like maybe you didn't bank on it. And so you didn't save that money as you were making it throughout the year and put it in a high interest yield savings account or something for taxes, right? And that's where your CPA is going to come in. And your CPA is going to really help you understand, okay, no, like, you need to save for taxes. You need to have, 35% of your income or whatever, siphoned off and in this little high yield savings account ready for taxes, right? So that's going to be helpful as well. That's where your CPA comes in relative to your income. It's just like getting your process in place. The really big thing that I just want to emphasize more times than I need to is that your CPA is one of the advisors on your team. And I think one of the things that I generally feel in all ways is the most trusted advisor should be you. So you should be the most trusted advisor for your situation. And you should rely on professionals of all areas to inform you so you can make the informed decision. And I think that oftentimes we think, well, I'm a dentist. I'm just going to focus on being a dentist, and I'm going to put a team around me of people who are going to be able to give me the guidance that I need to make strong decisions. Yes, you need to do that. But for every decision you make, you yourself need to be sure on, why am I making this decision? What is it in service of? And what are the other options? And why does what I'm doing make more sense than the other options? And you should be able to articulate that to anybody. And I find what often happens is people don't get that level of clarity, where they're just going to say like, oh, what should I do? Your accountant's going to say, oh, you should pay yourself $15,000 a month. Great. So then you ask somebody, what are they paying themselves? I'm paying myself $15,000 a month. Well, why are you doing that? Well, my accountant told me to. Why'd your accountant say that? Yeah, I don't know. I just trust them because they're my accountant. Like, that's not a good answer. You need to understand and explain it to somebody else the same way that a professional would explain it to you, so that you make sure that you understand what you're doing and why. And I think that this is something that I just feel very strongly on, and this is where I'll talk about CPAs, I'll talk about lawyers, I'll talk about, practice management professionals, like the whole gamut. Anybody who is giving you advice in your business or in your professional life, they are not spending as much time in your professional life as you are, right? So let's just say, for example, you're working with a coach, and we advise you. We say, okay, well, like, hey, you should expand your hygiene days, or you should change the staffing schedule to this. And you, as the entrepreneur operator, you know that the team member who they're suggesting we move their schedule around is picking up their kids, and it really doesn't work. You kind of know best at times. And so anytime you're working with a professional, you need to push back when something doesn't make sense. And you also need to be very clear on the fact that you need to be the one driving the show. So they need to be informing you so you can make informed decisions. But what's not correct is having them make the decisions for you without you understanding why. I'll go back to what I said at the very beginning, right? You have 10 patients walk into 10 dentist offices, and you have 12 different treatment plans. Okay, well, if you had that much variability in dentist opinions, how do you know what's best? Well, I think it's very similar with professionals, right? You talk to 10 different accountants, you ask them the same question, you may get different answers. So how do you know what's the right answer? It's about you. What are your goals? What do you want? And so you are the variable. And so I think that that's where, like, I really encourage each person to push back on their professionals. And if they're not getting the answer they're looking for, to like kind of argue a little bit and to get very clear and to make sure that they are making the best decision for them, regardless of what the professional thinks. And it's also good to get like-minded professionals, right? If you are somebody who wants growth, try to talk to an accountant who's a little bit more sophisticated in that area, right? You don't want to have like a very traditional accountant who is very expense control heavy and isn't really growth minded or doesn't really understand growth. They're never going to be the expert on growth, but at least they could kind of understand. Like when I had that conversation with my accountant, right? I said, hey, I think I can do 150 with this team. So, and then my accountant was like, yeah, if you could do 150 with this team, then I can be malleable in my beliefs and think that your staff costs would come back in line. So let's give it 3 to 4 months, try to do that, and then let's revisit, right? That's a professional that is bending to my needs. And that's what you want in your professional relationships, is you want to be the one driving the show. You want your professionals to be adaptable to you, and you want to be the person that's most informed, making decisions from your gut, knowing that these are the right decisions. And if somebody asked you, why are you paying yourself $50,000 a month? You say, oh, I talked to my accountant, and they said that I'm doing this for this reason, to set, some type of salary, and then I have tax benefits. And like, you need to explain it to somebody, and you're explaining what your accountant told you. And, that makes sense. And, one more thing I'll say is the life of a professional is changing drastically with AI. So with ChatGPT nowadays, professionals aren't answering the basic questions anymore. They're answering the nuanced questions, and people are coming in more informed. And so ChatGPT or any type of LLM is going to be a great person for you to bounce ideas off of as if they are an accountant. But maybe more malleable, you talk to ChatGPT before your accounting call, you ask it all its basic questions, you have the whole conversation with ChatGPT before you get on the call with your accountant, and then boom, now you talk about, you're much more informed walking into that conversation with the accountant, and you can get more nuance from that conversation. And so I do think that there's an element of AI as well, that's, something that's up and coming, to the point where professionals are fielding less basic questions and they're fielding the more advanced ones now. And so try to be on that trend as well, where you're learning to use AI to do some of that basic analysis. And then when you go to talk to your professional, now you're focused on the stuff that really matters. And so that's my advice to you guys in general. And I hope that this episode was helpful, because I think that it's one of those things that, like, I've talked to people and they're like, yeah, George doesn't like accountants. And it's like, I think that there's maybe more nuance to that statement, where it's like, yeah, George doesn't think accountants are the best advisors for practice growth. Yeah, 100%. And I stand by that. I think accountants are experts at historical financial analysis, and they're also experts at tax and compliance. And they're also experts at reducing risk of embezzlement and tracking embezzlement, right? Those are the things that they are the most trusted advisor for, as they should be. And I think the layers that need to be added to this, and this is what I learned, becoming a CFO, I learned to respect, the good work that they do. And I think that maybe before that, I wasn't the most understanding of their education and how they think and their thought process and their view on things. But leading a finance team, I've kind of become much more appreciative. But at the same time, I still very clearly agree that there's a void that we all need to acknowledge. And we need to acknowledge it so that we know where we need to maybe go get different advice or listen to someone else. Because if we want to grow, or if you want to understand practice operations, KPI, practice health, and the further away it gets from the finances, the less applicable the CPA is. And so we just need to kind of understand that as well. Hopefully I don't get like an angry mob of CPAs listening to this episode contacting me. I think, I tried to be respectful, but at the same time, my job is to inform our audience as dentists, practice owners, and pre-owners. Where is the CPA your most trusted advisor, and where should you be your most trusted advisor, guiding your decisions, listening to all professionals. And as it pertains to growth, you really should be listening to people that know growth. And that's where I think we come in. And, practice growth is what we do, right? So it's like someone like that. Like if I wanted to grow my practice, that's who I would listen to. And then I would make my own decisions, but like they would be my most trusted advisor on growth, right? And then you have your most trusted advisor on tax. But like you kind of need to have it be a little bit more nuanced. So hopefully everyone listening to this doesn't feel like I offended all their accountants, and also could feel like they are better informed on how to be their biggest advocate and how to work with professionals of all types, especially CPAs. So thanks for listening to this episode of Ask George. We got this submission through the team@sharedpractices.com email. So somebody reached out and said, hey, I want you to talk about CPAs because my CPA is telling me this, this, and this, and I don't know if I should agree with it or not. And so here we are. We did an episode about it. So if there's a topic you want me to talk about, team@sharedpractices.com, or you can email me, george@sharedpractices.com. We want to hear from our audience so that then we can know what content should we make moving forward so that we're talking to your needs. So feel free to reach out, and thanks for listening to this episode of the Shared Practices podcast. And, hopefully we can hear from you, and then you can decide what we talk about next time on the Shared Practices podcast.
Resonate.